again, China still has deflation, right? Like it still is a weak economy. The GDP data is still negative. So I think it's very unlikely at this point in time that the central bank has an incentive to allow the CNY to appreciate a lot. But these capital inflows are still important and are still positive for China. And I don't think the government is particularly worried in terms of the export sector losing competitiveness, that it needs the currency to be weak. But I think it would be worried about the impact on inflation. Because as this chart shows, this relationship between import prices and the PPI, you would expect that if the currency appreciates, import price inflation will come down. And that's been one of the few things that's been driving inflation up. So there is an incentive, I think, to keep the currency, to prevent the currency from appreciating too much. But that can still be positive for China's economy, because essentially what would drive domestic money supply flow and therefore help domestic reflation is that money comes in from the rest of the world that isn't sterilised by the central bank. So it increases the domestic money supply and therefore helps prices start to rise. And I think that basically is the process to be looking for in China during the course of 2026, that these different things that are happening externally, the stabilisation of producer prices, the weakening of the US dollar, it's basically the same sort of reflationary process that's helping the rest of the EM. That also that starts to help China and helps China with a domestic reflation process. And that, I think, is the positive argument for China this year.